What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, guys. Welcome back to another live stream. Happy Monday to you. Little bit of a bit of a weird past week or so, with the idea basically being we had that shortened week last week. We had the jobs report fall on that Friday morning. Then the markets were not open. So we are getting a little bit of an interesting start to the week here. We've now seen some jobs data. We talked about on the Sunday video that I put out, some of the continued escalations going on in the Middle East. That being said, we have oil a little bit soft here this morning to the downside by 1.6%. Stocks are green, timidly so, but still green nonetheless. And that does also means a little bit more when we think about the fact that we did gap lower initially on the week. You can see we gapped lower for S&P 500. Gold was up. We're seemingly kind of back to flat on the day. Silver, same thing. Precious metals are holding their own here. I've got to give it to them. Take a look at your daily chart on precious metals just from a higher time frame, and I still am in the frustratingly boring camp of thinking I'm pretty neutral on precious metals at this time. I'm neither interested in buying for the long term, and I'm definitely personally not at this time interested in taking shots at the long side or short side. When we take a look at some of our comparative metrics here through our scorecard, when we look at this, what we have for gold is a neutral reading. Now, I will do some quick analysis on lower time frames just for my shorter term traders listening in. And by the way, I hope you guys all had a wonderful weekend. If you celebrate, then happy Easter to you. And I did a whole lot of hanging out with family this weekend, so it was great. And it was beautiful. The weather is where I am in Georgia, southeast US. It is absolutely beautiful this weekend. It was really nice. That being said, talking about gold here, neutral reading for me, still kind of in the camp of thinking fundamentals are dragging gold's reading. Now, let me explain a little bit as to why. The jobs report last week, which brought on a lot of controversy on my channel, by the way. People were very upset that I'm saying that the jobs number was strong last week because, and I'm not going to get into this because it is a can of worms, but a lot of people, they can't help but bring their political bias into the markets. So when the jobs report was terrible last month, a lot of people who, don't like the current administration is like, ha, told you so. See, look at how bad the jobs report. And people who really like the administration was like, no, those jobs are, you're not looking at straight, and then it flips the next month around, right? Where we have a really strong jobs report and people are saying, nope, the data is actually fake, who dislike the administration, and people who do like it are like, haha, see the jobs data. I do want to just encourage people to try your best. I know it is hard. Everyone has a bias or a political bias, but try to leave it out of your trading. It really will do you a better service. But the reason the conversation came up was because people said, you shouldn't trust the jobs data at all. It shouldn't even factor into your analysis. Well, let me show you something. Because of the jobs report, we saw immediately following it, the bond market price in probabilities that rate cuts were less likely for the rest of this year, and even that there was a possibility of a rate hike, which increased in probability slightly following the jobs report on Friday. What that tells you is that the bond market factually moved in a more hawkish way following the jobs report. Now, you may choose to think that the whole bond market everyone who participates in the bond market is in on the manipulation, or you can kind of just acknowledge that, hey, all right, so the jobs data did show some uptick in economic data. And for me personally, just throwing it out there, again, everybody has their own opinion, right to their own thought. I'm going to trust the bond market over someone's conspiracy in the YouTube comment section, because the bond market is ultimately incredibly intelligent. I often say on my channel that I think the smartest market is the bond market, because it is looking at very closely what is happening with, the central bank here in the US, as well as what's happening in the banking world in general. It's looking at inflation expectations, economic metrics, Fed commentary, et cetera, et cetera. So anyways, with that said, when it comes to where we are at, is the jobs market in excellent condition? Definitely not. Other people pointed out that Powell himself had mentioned that the data was misleading. And the people who point to jobs data being fake absolutely loved that. They were like, Powell himself said it's fake. I had a couple people comment that. And I had to clarify that no, he did not. He said misleading to only look at one data point. As we often say, and as most economists often say, you don't want to look at data points in isolation. Why? Well, because again, if we go take a look at economic data, jobs market data, NFP, right? We take a look at the jobs added. The reason you don't want to look at a data point in isolation is because if you only looked at this, you'd say, wow, the jobs market's great, right? We beat expectations massively. But if you rolled it all together and said, how have we been doing? Well, we've had some beats. We've had some big misses. We've had some beats. We've had some big misses. The commentary, I'm paraphrasing, Powell kind of delivered, is that jobs gains have been mostly flat for the last year. And downward revisions, which is another common thing that people are all upset about. They keep revising the jobs data down, and Trump's team is manipulating the numbers. Look, I don't know. I'm not there. I'm not saying I know factually that they're not doing that. But they did the same thing. We had revisions down in both the Trump administration. We've seen a lot of downward revisions, as well as under the Biden administration. So people love to just overlay their political bias on top of this stuff, where I'm saying, and I'm vouching for, look, set aside for a second your views on it and just acknowledge that if you like Powell's commentary, I think that's a rational take on it, which is jobs data has not been great, but it's also not been terrible. It's actually been very resilient. Powell has a number of times said that the U.S. economy has been far more resilient than he or many other economists for years have expected it to be. And so when we look at everything in aggregate, the dollar still looks strong to me for that reason. We have relatively upholding jobs data, given what's happened in the last 1 month with oil prices shockingly up, uncertainty in the Middle East, all of this combined. I'm kind of in the camp of thinking that this is more of a situation in which the Fed is going to focus on inflation rather than jobs. We had a good jobs report on Friday. That does not necessarily mean that the jobs market is just great. That's not what I'm saying. I'm just pointing out that generally speaking, we did have a good jobs report on Friday, which helped to soothe a little bit of the worries of the jobs report prior, which were way worse, right? Interested to see what the data looks like from March. Yeah, me too. For sure. Sorry, I had to get all that out in one. So I know I did not go through many charts there. I just talked about the jobs report in total. Talk about your new nickname on Adorable Possum. Yeah, so here's a really, First of all, I love that nickname. And I was talking about that this morning with Emily from my team. So I have a new couple things about my Discord life. First of all, new profile picture. I feel like it's, warm and inviting. Nice picture of me. And by the way, I took that picture and then I put a AI sunset behind it because I had a bad background or just like a boring background. So I put a sunset behind me. Anyways, this weekend, this is crazy. I got banned on Discord for impersonation. Guess who I got banned for impersonating? Myself. I'm not even kidding. Look at this. So yesterday, I literally got banned for impersonation of myself. So how did that happen? Well, someone who probably doesn't like me very much spam reported my account. Fortunately, I was able to get it back within a few hours, but still, it was like, what the heck? I got banned for impersonating myself. What in the world? I was like, this is ridiculous. Anyways, all sorted there. But now, I don't know why, but when I got my account back, you guys may all now refer to me as Adorable Possum. Okay? So from now on, when you refer to me, skip the Trader Nick nonsense, Adorable Possum. And if you want to get specific, Adorable Possum 83329. All right? Now that we have that settled, let's proceed. So stocks. So the question is this week, we saw, obviously, I'm not going to get political here, but an insane tweet. I mean, come on Sunday, on Easter Sunday, some wild comments from the president, who was clearly very passionate about the subject, demanding that the Strait of Hormuz be opened, or else on Tuesday, which is obviously tomorrow, there would be a further escalation in regards to energy sites in Iran. A very, very strong take from the president, which obviously had a lot of response across social media. Regardless, taking it for what it's worth in regards to markets, which is again my constant reminder here. I do my very best. I am a human being, but I try to keep political views to the sidelines when we're just talking about this from a market perspective. You may agree with Trump and say, yeah, we need to take this up a notch. We need to get this thing done. You may disagree with the delivery. Maybe you agree with the plan. Who knows? The point is, that's for you to decide. In terms of this market, though, in terms of trading actively, what does it mean for markets? Well, I think it's fair to say that this continues to put a bid on oil until we get some resolution there. As long as you have the strongest nation's leader promising to destroy things that are very sensitive to the supply lines of global oil supply, you are likely to persistently have oil prices move higher. Now, I saw one thing specifically, that European oil futures are skyrocketing right now. I don't even know how to look at that, to be honest. European oil futures. Can I find that? I can't. I'm not even going to try. So anyways, I saw somebody post a chart about it. So fair to say, I think that when you are looking at oil, you have some serious concerns in regards to future ability to have oil prices lower. And that changes things a little bit, because a lot of times, or a lot of what I've been seeing is sentiment is that this thing will still resolve within the next few weeks to months. That seems to be, when you look at like futures contracts on oil, like up, if you go out a few months in expiration, they're pricing it for this thing to be kind of over within, I don't know, 4 or 6 months. Someone can pull up the stats on that. But again, they're pricing it as it's not a forever situation. But if this continues to be a persistent escalation back and forth, where the Trump administration is offering ceasefire, it's getting declined by the Iranians, and then Trump is, offering a stronger take on what's going to happen next. When you get that back and forth, it just results in oil prices stubbornly staying high. And the longer this goes on, the longer or the more likely it is to cause actual economic damage. We've talked about this many times. Ivan says, why is the dollar down today? I don't really know. I mean, it's down a little bit. I'd say it's, really just kind of holding its gains recently. It hasn't moved very far. Still just under 100. But if I'm looking at the dollar in regards to this, again, the longer oil stays where it is, the longer we have this uncertainty, then obviously the more likely it is that this conflict is going to be more of a forever war type of scenario. And I hope that it's not. I think most rational people are like hoping for some kind of resolution or end to this in quick succession. But we'll see. Right now, oil being up and staying up is very dollar bullish. There's a number of reasons. One of the most obvious ones that I can tell you about is obviously we were expecting a couple rate cuts going into the year. That is being washed off the table. Yields are higher today and consistently trending up in recent weeks. Ever since this conflict has risen, one of the biggest changes macro-wise is rate cuts getting just dashed to the sidelines in the US. Now, why is the dollar so strong? Couple reasons. One of the big ones is that the US is is energy independent. So while other places and their currencies are dealing with, having to still get oil from the Middle East. I mean, that's like a predominant way that they get oil is through the Middle East, through Strait of Hormuz, all that stuff. That is more damaging to them than it is to the US, who is energy independent. So in some ways, if you compare the performance of the S&P 500 to other stock markets like the Nikkei, the Chinese, well, actually the Chinese stock market's held up okay, but like the Indian stock market, the German DAX, right? You look at these other places and they have taken much more damage than the S&P 500. Same too with the dollar. When we compare currencies, the dollar remains bid as it is looking very, very situated to, on a relative stance, outperform. We also just got hit with a round of good economic data. If we take a look at the asset scorecard here for the dollar, look, things can always change. I do my best to remain open-minded, but right now, pretty much every indicator that we have almost is pointing to dollar strength in the here and now. Fundamental score is getting a +8. That is the highest fundamental score I have seen on record for since we offered the US dollar for our asset scorecard here. Check this out. Jobs market data last week was really strong. We beat expectations by almost a triple. We had unemployment rate that was at 4.3%, that was expected to stay at 4.4%. We went lower in unemployment rate, which was good. Jobless claims were, again, we've had a good round, good couple back-to-back jobless claims. Nice number there last week. ADP was stronger than expected. JOLTS was like right in line. You take a look at inflation. PPI did move higher to 3.4%. That's above forecast. We also have the 2-year yield trending higher. Expectations are for that to be more of a hawkish response from the Fed. Meanwhile, you have PMIs came in strong. We'll see what services PMIs, I believe they come out today. So that is on the chopping block today. Retail sales numbers also beat expectations. Consumer confidence beat expectations. You have an upward trend. And crowd sentiment seems to be bearish on dollar. I mean, for me right now, a very easy decision, not necessarily a certainty that the market will move higher for the dollar, but an easy decision for me is to stay dollar bullish. Like we have uncertainty geopolitically. We have relative strength on the geopolitical front due to the U.S. being energy independent. We have a Fed that is changing from, paths to rate cuts to more on hold. And you look at all of that in aggregate and you say, okay, dollar's also looking technically strong. And we'll see if we can break through this resistance point. If we can't and something changes in the data, then we adapt. If it starts moving lower, if we fail at these levels, if we start seeing economic data disappoint expectations for the dollar, then we change our mind, right? It's really that simple. Follow the trend and stick with it. The worst thing you can do, in my personal opinion, when looking at markets is to die by the sword on a directional bias that you have. I will never forget for the rest of my life. There's a guy, I mean, I won't name him out of respect that he doesn't deserve, but there was a guy who told me for so long that gold was going to drop like a rock back at like 2,500 an ounce or 2,200 an ounce. Constantly bearish on gold and telling me I was dumb for being bullish on gold at the time, right? And gold has gone on a generational run, like an Alabama, like James, you'll appreciate this, like an Alabama football primetime run to the upside. That's the equivalent of what happened in gold. All right. So if that tells me anything, it tells me never die by the sword or have an absolute, XYZ chart is doing this and just die by it, right? Because you don't know. Something can change. The market is bigger than every single one of us. None of us knows with certainty what's going to happen next in the world. So I choose not to make those sorts of claims. I choose not to be predictive, but rather reactive to what the data and charts are telling me. Last thing here, and then we're going to bring in Ivan to the conversation. We have a huge discount going on for the EdgeFinder right now. The EdgeFinder is 40% off. If you guys are interested in getting access to macroeconomic heat maps like the one that I use here every single day, and of course our top setups algorithm, which monitors, I don't even know how many charts we do at this point. We have a lot. We have indices, commodities, currencies, and more, right? Even Bitcoin. And I think we're going to add more cryptocurrencies at some point. But for now, we have a lot of symbols here that we track within EdgeFinder. If you do not have a copy, now is your chance to get 40% off and check out the new profile picture. I mean, come on, that looks like, I'm not going to lie. The only thing that I would make fun of about my new profile picture is that it does look like the kind of picture that would be at my funeral. And so together we can kind of pretend that we're at my funeral if you don't buy the EdgeFinder today, because I might die of sadness. So buy the EdgeFinder because it's 40% off, and support my new profile picture with your purchase today of EdgeFinder, the best dang software for Forex traders, for commodities traders, indices traders who want to implement macro in an easy way. With that said, Ivan, we'll bring him in and say hello to him. We'll change the stream around. I got him laughing. I can see him laughing. He likes that funeral joke. Ivan, that's funny. We're talking about my funeral here. How are you?
I'm good. And you?
I'm good. I'm totally kidding. Ivan is the Nasdaq. Yeah. I combined Ivan and Nasdaq. Isaac. Is the Nasdaq going to bottom today?
Well, that's from last Monday. If you look at the chart, the bottom is last Monday. So yeah, of course. It has to go up now.
True.
Like that was 30th. That's old news now.
Yeah, no, it has actually put in some sort of a bottom here. The question is, can we get that next leg higher? And Ivan, what is your take on this obviously very electric weekend in regards to tweets and the energy facilities being targeted next by the US if there isn't some sort of ceasefire? How does this impact all of our charts, the dollar, gold, etc.?
Funnily enough, when I asked you the question, was dollar weak? Even though Trump has again threatened Iran with fire, markets taking, as you also pointed out, a very positive take on it. And as I've been saying lately, they haven't really priced in the consequence of everything. So I would say it does impact our chart, but it hasn't really been priced in or really fallen as much as you would imagine for us to have a regional war in the Middle East. And I just saw the last candle on oil going slightly higher. So it's still elevated. So to me, I'm like, shouldn't this be equal higher cost for trading or higher cost for businesses because it's higher financing costs? But for stocks, there is a room between higher inflation, which is now, until the Fed starts hiking, and that's the room where S&P 500, Nasdaq, or the stocks are actually benefiting from it. So it's a double-edged sword. It depends how you look at it, and it's kind of 50-50.
Yeah, and again, I think it's difficult because when you look at the oil move, right, you might think, well, why aren't we up way more than this? Well, we have this weird thing going on where because people, especially with a long weekend that we had previously, or this past weekend, a lot of people are trying to get out of the way of oil, dollar moves, S&P moves over the weekend. So there's also a little bit of that at play where you have maybe a little bit of uh, kind of unwinding their over the weekend hedges or positioning. That's kind of why I said I think it's still just choppy mix right now, is because you had probably a lot of people who, actually sold their Nasdaq and S&P 500 holdings on Thursday, the last open trading day, and then maybe bought them back this morning, or because it's hard for me to think that we didn't have some sort of further escalation this weekend. I mean, a 24-hour or 48-hour notice of open the straight or we're going to escalate things. To me, I would have thought that would have caused stocks to be lower today, and dollar to be stronger. So maybe a little bit of that was pulled forward on Thursday's trading.
Yeah. So what my understanding is that the market's calling it's calling the bluff basically. Um, and there's very little Iran needs to do just to extend all it and all this, and the deadline disappears. He gave deadlines to Ukraine. He gave deadlines to Russia. He gave deadlines to Maduro. Have given deadlines to Iran. A bunch of deadlines are across, but hasn't really had any effect or has had any consequences for anybody, seemingly at least. So market doesn't really believe at this point that we're going to have a escalation, or since we've been talking about the ground invasion for so long, then well, okay, cool. We I don't know if we have pricing the consequence of it yet, but we have softened up to the idea. So when that comes, it seems like it might not actually be so aggressively lower for the stock market, as we would imagine, because volatility normally happens when the idea first is introduced to the market, and then it slowly dies out. Also, this war, as I mean, we are lower, but we are not falling every single day. That what you would imagine when you have a war. But we have bounced, and Mark is like, is this over soon?
Yeah, and something kind of interesting. Someone mentioned that there is a current 100% reading on Polymarket, and I just pulled it up, and that is correct in terms of, I mean, it's a 99.6% chance that the U.S. forces enter Iran. Maybe somebody can confirm, was there some kind of official boots on the ground thing that shot this to this point? I mean, I'm confused, but maybe there was some kind of incursion of some sorts that is being counted by this, but I just thought that was worth mentioning. The question is, to your point though, Ivan, is like, is this all a bluff? Is this a posturing, like we've got forces outside of your gates, basically surrender? And that very well could be the case. It could be the case that it is posturing, and that there will not be the all out. And I think we've said this many times, but I think that the Trump administration and the market knows that they do not want to enter Iran. I've seen very, very hotly debated discussion around whether or not they will do it, whether or not they will back down. Because this is why it's so hard, Ivan. This is like he could literally say today that like we're out of there, like we're just done, and turn and say again what he kind of did last week, which is point to other nations and say, you guys deal with it, get your own oil, we're out of there, and take it as a win because he's not going to put American lives at risk, right? Like you can spin it in many different ways, and that's why it's so tricky. It's like, is he actually going to go in or is he not? That's the question.
And I can see the reasoning is quite simple, is that they have pulled troops into the area. So for it to be, what was it, 90 or 100? Well, fair on them. That's their bet, and we can't be wrong and right about betting. But I would imagine that well, it's just an analysis. It's just is this a take, and then they could be wrong or right about it, I guess, because do we know that Trump knows what he's going to do next? So you have to do analysis of the people around him then, if not so. So to me, it seems like, okay, what I said yesterday, why hasn't he done it already? If he wanted so badly to enter Iran with the boots on the ground, why hasn't he already done it? He already have all the assets ready, available. They can do it if they want to.
Right. And if you think about the whole way things went down with tariffs last year, maybe the market has this positioning of like, we're not going to buy the hype again, right? Last April, there was a huge sell-off in markets in response to the tariff, threats that kind of were unending, off and on, each and every week. Now, granted, you could also attribute a lot of that to hardball negotiations, but at the same time, the situation in which the ultimate kind of Chinese tariffs are going to be 150% or whatever he said, those were bluffs. Those were, or at least those were threats that never materialized. And perhaps you could say it's because he was successful in the negotiations to some extent. It kind of depends who you ask, to be completely honest. But I do think that, we know that the Trump approach is to be very aggressive in negotiations and to ask for a lot in hopes for something in the middle, right? So it is a negotiation tactic for sure. Whether the market is buying it or not, that's the question that we have to watch for.
Yeah, and when it comes to market reaction, I think you mentioned a bit earlier as well, but like what the market does in this situation is maybe not necessarily what you'd imagine it to do. Because now we are facing a big wall of wrath, if that is the case. We have also seen over the weekend, by the way, we have seen chemical plants being targeted. They have targeted a nuclear site about 4 times or so. Iran has previously said that's going to be an immediate attack going back. And they have attacked Iran back. But have we seen escalation in the markets? Market hasn't really been bothered about that.
Yeah. Yeah, it is. It's tricky to say the least. The U.S. stock market just opened up. We did see, at least here in the first few minutes, strong candle coming in on the Nasdaq, S&P 500. Look at that, Nasdaq up at 1% today, S&P up 0.5%. Oil is holding its own, though. So kind of interesting. You are seeing something that we saw on Thursday's trading action as well. Strong oil prices and holding up in the equities market as well. So one of these two things, I think personally, is going to give. And someone said, why isn't it calling for the Nasdaq to fall? I am in no way bearish on the Nasdaq, and I want to point out that I'm cautious. I'm not long at this time, but I do have more indications and interest in being long on breaks and retests on some sort of de-escalation news, rather than trying to short the market. Personally, that's just my take on it. I am also long the dollar. I have a Euro USD short that is still open. I took half of it off. We'll see if this one continues to roll over in the meantime. Ivan, what'd you say? Yeah, I did. I sold it last Wednesday. So
okay.
Yep. And so we'll see where that one goes. I sold euro dollar. I'm long oil. And those are really my two active momentum trades for now. What are you looking at today, Ivan?
So you traded euro dollar before Christ was crucified. So I guess you are.
That's right.
Okay, then.
That's right.
And on another note, I thought it was Mustache Monday today.
It was once upon a time, but we're both clean shaven.
Yeah.
We look great. We look great on this fine Monday morning or afternoon for you.
Yeah, it is. Probably evening soon. Now I'm looking to buy euro.
Okay.
I'm just waiting for this one to turn around. And in the sense that the whole, because I'm on the camp and I see in the camp of is us this ending, and I'm not calling the end, I'm just waiting for the end. And if the end doesn't come, I'll be not in profit. I'm not going to lose money in just waiting. So I'll do something else in the meantime. But for my dollar, because the other side of this is we have higher oil price, we have higher inflation coming in probably being reported for March on Friday. I agree. I can see that. But the backdrop of that, what is the consequence, is recession. So yes, we are pricing in right now the increase of inflation, but the backdrop of that is we are going to have recession, and that is rate cuts. Now that's a tricky version of everything, because it's when does the money flow go in and out. So my version is when this is over, is we're gonna go dollar bearish, and
Yeah.
I feel like I've been battered about the dollar bearish theory that I've had, because you guys have been making money. I'm not FOMOing, but I'm more like, could have done it.
Yeah.
So I'm sticking to my guns.
Well, and I think the euro dollar longs. Meanwhile, as I am euro dollar short, I would say, though, I would definitely concede that if you do get geopolitical uncertainty, the euro dollar is probably going to fly to the upside. That would be my take on it, was because, again, some of the things that we talked about earlier, the relatively better position in regards to energy independence that the U.S. has is also playing into a strong dollar. We've had a good round of economic metrics for U.S. So let's just say that maybe the economic data softens in some way, and then you also put together with that de-escalation, then yeah, I can totally see the euro dollar breaking out and moving higher. I don't see that personally at this moment, but as you pointed out, and I think it's the right way to look at it, is to be cautious, wait, and see that kind of price action forming, that narrative shifting. But again, I think that some of the things that would be most positioned for upside in regards to a de-escalation trade, keep it really simple. It's the things that have been hit the hardest in all of this. Tech stocks would be on that list. Silver would be on that list, and counters to the dollar. I think that if we're keeping it really simple here and we just say, all right, which things have gotten hit, those things, if you believe a de-escalation event is around the corner, or if you wait for the de-escalation event and you look for turns in those charts, could be things and candidates to watch in your own analysis. So I totally see that in regards to a setup there. Again, for me right now, I've taken half my position off on euro dollar. If it does continue down towards the bottom end of this range, I'll take the rest off of it. And again, I'm just playing that dollar strength in the here and now until it shows signs of reversal. But as always, I think we say this often, but it's a good idea to have your opinions, but always keep an open mind and be willing to change them if something new happens or hits the market.
Yeah. So how I see the market, and yes, I do agree with your very last comment there, is you have to adapt. My problem that I've faced is that the first initial push is always where the most amount of money is, like the biggest volatility. So if I were to short euro in my field of lands, it should have been 118 or so. It should have been the open. Should have been when they announced that they were going into Iran. That is about 100, or is it 150, 250 pips away ago. So I am like month and a week too late. So to me, then what do I do then? Then we need something more and something bigger escalations for that matter. And even in this scenario here, we have had a lot of escalations, and euro dollar hasn't really pushed lower. And the further we go, the more bigger escalations we need for this one to continue lower. And that seems to be the case every time there's a risk event. So that's kind of my take as well, is that if we then need to make a new lower in euro, it has to be, I'm not going to use the words, but let's say all the countries of the world engage, kind of a thing. And that hasn't happened yet factually.
Yeah. And I think, again, that's the way to be thinking about it, is like, if I'm going to be short euro, if I'm going to be long NAS, like, what do I need to see for new rounds of buyers to continue, or new rounds of sellers to continue coming into the same idea? I think that's a good, and I think actually I would encourage many listeners to think about that when when you talk about that, because Ivan, I feel like you explained that topic really well. You've done a really good job over the time. I've heard you explain it many times, that concept with oil, right? Because it's probably the perfect chart for that discussion of, if you're going to buy oil, who's going to buy it from you? Because what many people will do, and they'll make the mistake of, as you are very well aware of, Ivan, is like, people will oftentimes be like, I'm buying oil because the Middle East is really scary right now. And that makes logical sense if you are like a brand new trader. If you're like, oh yeah, I mean, obviously oil is going to go up. But the problem is, markets are forward looking, and you have to ask yourself at all times, what does the market need to see next to get this chart to keep going up? Because when you see it, when you, me, and everyone else sees Trump make a crazy tweet, by the time you and I read that, the market's already pricing that in. It's already figured that out. It's like, okay, some crazy stuff's going on. So if you're buying up here thinking some crazy stuff's going on, oil's going to go up, you're behind, right? You're buying later than everyone else. And so you have to be careful with that line of thinking. Now, for me personally, why am I long oil? Well, from the demand side, some of the strong jobs data that we saw here recently, I do still like the demand side of oil, which before the war, I actually was bullish oil, in no way related to trying to call out that the war was going to go down, but rather because I liked the economic metrics that were coming in. We had some decently uptick data in regards to growth metrics, et cetera. And I've still got that story playing out. Now, granted, the bigger story right now is more the supply side of it, which is the geopolitical stuff. I'm partially long oil because I like the demand side story with economic metrics. Specifically, if I just pull up my asset scorecard here, if we go to, where is it? Oil here, it's got a +7 overall reading. A bunch of this score is, of course, due to the jobs market data coming in stronger than expected, which is a positive sign for, for jobs data. Anyways, I also wanted to have some sort of a hedge to my long portfolio of stocks that I own that are in the red. So nicely, oil has been able to kind of hedge that bet a little bit. So it's both a hedge as well as a momentum trade that I like to the upside. But again, if I'm asking the question, what has to happen for this thing to keep going? A lot has to keep going, right? For this to pump through those highs, it's a bit of a hedge for a reason. I'm not necessarily predicting that I think that's going to happen. I have long stocks that I want to hedge some risk to with oil trades long. I've trailed my stop loss, and if it breaks back down, then I will take a profit on this trade. Otherwise, I'll continue to try and roll these stops. And notably here, for my friends following oil with me, I'm keeping an eye on this level here, this 110 mark. If we can break through the highs today, get that kind of movement going, then I'll probably take this stop loss and just ratchet it higher again, lock it in, and just keep the hedge going. So that's that. Ivan, I'm going to give you the floor here for the next 15 minutes to go over some charts on your own. Feel free to do whatever you'd like here. You could even sing and dance for us if you'd like. That would be awesome. With that said, Ivan, thanks for taking over the show. And hey, guys, don't forget about the EdgeFinder 40% off discount. We'll drop a link here in the live stream chat if you want to speak to a member of our team about getting set up with our best discount price of the year for EdgeFinder, Stockbox, or our VIP membership. Ivan, you got it from here, man.
Thank you very much.
See ya.
See ya. What I also want to add to that discussion is when we went to 120, that fateful Monday, 9th of March, as a trader, you would pull out. You would take your profit and leave, and that's why you had this massive sell-off. And then you need to find new buyers to come in. And if I were in at 69 or 70 or somewhere down here, what am I going to do going forward? I'm going to pull profit as we go higher. I had a discussion with Alan a bit earlier about a quiz in Telegram that didn't have that option. Because when you go into a one-directional market, less liquidity as you are going high because people start taking profit. You don't get more demand unless you have escalation. And that's kind of what you have to look for, is the escalation, is the invasion. But even then, when the invasion happens, I think this might be a different war than when we have the Strait of Hormuz closed. Even though with all the efforts of it being opened, even with Oman and Iran meeting over the weekend, and to have it somehow opened, at least for friendless ships. That when that happens, yes, I believe that should send oil price higher. That would totally make sense. But then what? We can go higher with this constraint in supply. That is plausible. But there was also so much and so many efforts to increase supply somehow, somewhere. I saw Iraq was able to sell some oil through Turkey again. That was down for some time. The oil being sent to the Red Sea from the East-West pipeline in Saudi Arabia, and the release of the what's it called, the petroleum reserve, special petroleum reserve, both United States and by EIA and its member countries. So, I mean, we are going higher. That is definitely the price case, but it's less liquid, and as we go higher and the risk just increases. That's what I would just want to inform about. The risk increases as much as further higher you go. And if you go back to 2020, though it's not the same, but it's still the same, that was the end. So we did rise higher. We had a threat about a nuclear war in Europe, and Russia had put everything together to make themselves ready for it. When they didn't do it, there was no announcement, but market just didn't see it happening. Never happened, so it priced it out, and that's a volatility of a good 7% in a 4-hour candle, and within a few hours or day, just gonna double check that, 4 hours, we fell 20%. So that's the volatility when the market believes, not analysts, when the market believes that it's over. So higher for now, and then we shall take it off. Then we shall see for that. The de-escalation line is too low. Now, it's not necessarily a de-escalation line per se, Ari. It's more where we have a risk premium priced in. Where are we above quote unquote normal? When do we have a constraint of some sort of an issue? So it's more like an issue line. So once we are below 80, in my eyes, we don't have a pricing in of a risk issue. Then if we are below 80, I see that as a supply and demand, normal market operation kind of issue, that we are at 80, more than it being a constraint and a threat to the oil market. Silver is -6. Any short setups? For me, I'm a bit of a different animal. Silver to me is long-term bullish, and to me, I see that, if you were to sell, I would probably say, okay, cool, you do that, and that's probably a good thing. That's probably a fun thing to do. I'm sorry, that's would make perfect sense, and that would be around the current price that we are at, coming down to about 65 or so for the week, fair and square. The reason why I'm not jumping on that is if we collapse or so, this should have a bullish turn. So when I say a longer time, I'm saying in a year's time or 6 months time out. And for me, I'm not trading silver or gold for short-term gains or for a paper here. For me, it's long-term risk against inflation more than anything else. So when inflation now is rising, fair enough, then we get a better price. We get a better price. And that's generally my take on it. And then gold is having a red candle at the moment, or white candle on my chart. But to me, we have bottomed out at 4,100. I'm not going to say that's going to be the price forever. That is the current price. That's the current level it has bounced off from. And to me, I'm just waiting for the release and the end of the war. Now, for Iran is I see that it's in their benefit to keep the strait closed. They don't need to open anything. They have been through a lot way before this war started. So they are war or risk. What can you call it? They already weathered. So this doesn't bother them. They even make more money out of it. And they've even made back all their money that they have spent on the war, allegedly at least, on the shipments of oil, because what they could previously charge 60, now they can charge upwards of 100. So so they have increased their income by 30 to 40%. Fantastic, as their eyes, right? And but with Trump is threatening with complete destruction. They already have come to that fate for a long time ago. That is not a new thing. That's even a positivity that if they were to do that. So for them, the threat doesn't really work, and they can just keep going. That, to me, has to end, or that idea has to kind of be. Maybe that's just a tough guy talk, but for me, this thing has to end. It doesn't have to end, but it has to end for me to be buying into gold comfortably. And until then, we are just going to be in my view, in a range or volatility up and down, depending on who says what, who doesn't say this, and whatnot. Hopes of having an agreement or not, and I'm just gonna rake up swaps and costs more than us being in a clear market, because right now I see 50-50. I said that yesterday, we're in a 50-50 situation. We can either have boots on the ground, we can have a further escalation, or we can have a deal. The deal looks a bit difficult today because of the threats, and Iran doesn't want to really talk. Okay, cool. But it's still a 50-50 situation of how I see it. So, and the other situation is that Trump just pulls out, which, great. But that leads up to Iran to open it. Are they going to do it on their own? To me, that is going to push gold up and down, silver up and down, not really going to give us a clear direction, because the demand, supply, the current risk environment, what drove the price of gold lower, hasn't really been resolved yet. Could you explain this fundamental view of a bearish dollar, euro to 120 after the war? It's just I don't see how that can happen after the oil shock. So, Otherman, is that so number one driver is dollar strength now, fair and square. That when the reason for the dollar strength is removed, you would then have to take your money out, because you have put your money into U.S. Treasury bonds, and you're gonna get what, 3.8% return. But if you can put it into Aussie, or if you can put it into another country, and you can get maybe 4, 5, 7, 8, 9%, you would take your money out of the stock market. So out of the bond market. So the bond market is just a park for money. You will take them out when the risk is not so great as it currently is. Number two, now we have high inflation. The backside of this sharp rising inflation is the sharp fall in inflation, as it's just temporary. Coming back to where sharp shocks in inflation higher could lead to recession on the other side. So then we go from we're going to have the stagflation going into we have too high inflation now. The growth is going to get killed. Jobs are going to get killed. We're going to go into recession. Recessionary for dollar is bearish. So it's just that currently we're staring into the massive increase of inflation, and the opposite side when it's over is we have very high inflation right now. That's not going to come down in a few, and that's going to kill any investment, any growth. And what happens then that is recession. So it's kind of more like what idea drives the market, and then when that idea is removed or it's no longer there, we're going to do the opposite. So it's the money flow, it's the direction then for for central banks. And number 2 or 3, sorry, is that we're going to price out rate hikes that we have been pricing in across the board. And we're going to go back to rate cutting again. So those are the 2 major ones. Because as I said earlier as well, when we had COVID, when we had March 2020, we were, for a year at least, it was rough economically. After the fall, we had posts of 20 million job losses after the fall. So why wouldn't the market just continue falling then? Because central banks' monetary policy was changed to accommodate that fall and put $3 trillion into bonds, or promise they're going to spend $3 trillion into bonds. They started QE, they started cutting interest rates to low. And all of a sudden, it didn't matter what the economy did. Because no matter how much we fell, we believe that's the market that the central bank is going to come in and save us, which they did. And then a bit more, and a bit too much. But we got saved. And that's ultimately the most important part. Trump has increased in Iran's revenue. Yeah, as you said that. And yeah, that's why I don't think Iran's going to, at least willingly, maybe they will, but not willingly agree to anything because they don't need to. So would you sell gold when it hits within new sets? That's definitely a story, or you wait for a pullback. How you want to engage with the market is totally up to you. But for me, it's a two. For me, I normally do a 2-step process of half at when the news happens, and then if there's a pullback, so that I get a cost average, an average price going in, and then add as we continue. But then pause when it goes against me again. Of course, always risk. I don't risk much in the initial ones, but once we start going, I risk more, going into more normal position. But that's just a general idea of how I do risk events. What's the view on yen? They are supposed to hike, and they have increased prices now with inflation, with the rising oil price. But it doesn't necessarily mean that yen is going to weaken. Sorry, we could get stronger. It's a weaken today. Seasonality for yen pairs is that we have the end of the financial year of Japan. Is it today? Is it yesterday? Or sorry, is it first, 2nd of April? So we are in a new year now. So that generally means that because you have to pay your taxes to the government. So that would be inflow of yen, strengthening yen. And when that is over, that artificial every year, that strengthening in yen, when that no longer comes in, yen weakens. So for April, generally the first week, we're seeing yen weakness, seasonality-wise and money flow-wise, and that's what we are seeing today. So that's what I see now, and then I need to remember, shall we see, when is Bank Japan next meeting? Because that's also supposed to be an April meeting. Of course. When is it? 27th? Oh, okay. Cool. So to me, we can still have this week yen weakness, looking for pullbacks on yen pairs is probably what I'm going to look for. Though, as long as dollar yen doesn't go above 160, I'm okay. What do you think about the Swiss? I really want it to be weak. That would make sense. But it's all over the place with a safe haven, with Europe being horrible, being in a worse place, with it being a safe haven, with the Swiss coming in and interfering with the market with interventions. It's a bit all over the place. So it's really difficult to kind of catch a break of anything at the moment. So economically, they were doing quite bad, but on the other side, it's difficult to kind of time it. I still have my Aussie CAD trade on, and it's coming along pretty great. I had my euro dollar buy here, and did I buy it here or something? And hit stop loss, waiting for it to enter again. Though it's just I have taken the position of I'm just going to wait for the market to turn around / get a positive because we have taco. But it's more of I don't want to incur more costs or more losses because it's totally necessary because my analysis that we are in a 50-50 situation with troops on the ground or having a deal. So I'm just going to wait for the fact off more than predicting it, and getting a good price is all. It's of course what I want to have, but that's generally when we have the news, we're going to move, in my view, about 200 or 300 pips extra. So if we have that with the news and then another trade for a week, then yeah, I'd rather take that trading for 7 days straight up with the certainty and competitive advantage and a clarity more than I hope and pray that Trump or Iran makes a deal, or I hope and pray that they do put boots at the ground. My name is Ivan. I do help you guys on this side. I really, 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 really want to also have a chat with you about trading if you are struggling, so that you can become the best trader you've ever been. So I do offer that, and if you head over to my YouTube channel as well, I'll be live tomorrow and going forward. So I hope that you don't do anything bad or anything, and just continue to do great work you're doing. And until next time, boom, I'll see you.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How's everyone doing today? Hope you guys had a good weekend here. It seems like we are opening up the market here with some optimism, though we did have some scary headlines over the weekend, and it seems like both the US and Iran have a very short timeline or deadline. And it's coming up here pretty soon. So we'll go ahead and see what happens there. But we do have, of course, like I mentioned, risk trading today. So you have the Nasdaq higher. Let me just go to a daily time frame here. Nasdaq higher, again, still vulnerable to that 200-day moving average. S&P as well, up higher. Dow Jones as well, trading right below that 200-day. So still nothing clear yet. And I think as long as there's nothing clear yet as far as a resolution or ceasefire, then these markets are still vulnerable to the downside. Dollar's pulling back a little bit here today. Let's just look at the relative strength index here for currencies. You do see that risk is on top. So you see Aussie and Kiwi at the top here, and then you have yen and dollar at the bottom. And then in the middle, you have your euro, your pound, your Canadian dollar, all that good stuff. But clearly a risk day. So we'll see if there's continuation in that front. My personal opinion, I think that's what you guys want to know here is what I'm looking to do. So I don't have any trades on at the moment that are directional. Like I do have like the yen basket that I'm trading, but that's very speculative. That's just on the idea of a potential intervention, and I don't know the timing on that. So that's kind of like a test position. But I do want to go ahead and get involved in like my main trend following Forex trading, all that good stuff. And I do think that I still like the dollar to the long side, even if there is a resolution to some sort. Now the question just becomes, whenever there is a resolution, I do expect some kind of a repricing in the dollar, taking it lower. And the big question for me is like, when does that stop, and when can I buy the dollar on a relative discount? So that's kind of what I'm thinking of right here. I like the 995 level here. I like it a lot. It's been holding up here. I do like the 98,500 level where these 200-day moving average and the 50-day are meeting. So that would be preferred as well. So that's kind of what I'm looking to do. And the reason behind that is the U.S. economy has been quite resilient despite all this, right? The data has been looking out pretty solid. If you just look at our screener here, the EdgeFinder, And for anyone watching, anyone new, this is what I use to form a directional bias as far as the fundamentals. Like fundamentals lead the way, and the EdgeFinder does a fantastic job at finding those picks. And then it's just up to me to find a technical level that I'm comfortable with. But if you just look here and you just type anything USD, you can see here that the dollar index, or the dollar itself, is very bullish, right? You have dollar yen very bullish, dollar Swiss, dollar CAD bullish, and then the counterparts, pound, Aussie, euro, Kiwi, those are very bearish, right? So I want to continue with that theme. It's just a matter of finding a pullback and filtering, which one of these I want to choose from, because the EdgeFinder is telling me that I have essentially 7 pairs here, 7 pairs to choose from as far as trading the dollar upside. So it's just a matter of, which one fits my criteria best from a technical perspective, right? Just off the top of my head here, dollar yen, that chart is very bullish, no pullback. So that one's probably not on my list. Dollar Swiss has run up as well. Dollar CAD price is moving already. So it's just a matter of finding those pullbacks. You are getting a pullback here with the euro dollar, as I noticed this morning, because you are getting a soft dollar there. So when it comes time to execute, I am looking for short opportunities on the euro dollar. So, not financial advice, guys. This is just me sharing my thoughts and opinions, but I think this is a really good setup. If you can somehow find our way back all the way into this level here where we acted as resistance once, twice, 3 times, 4 times, 5 times. And if we get here a 6th time, I think there's a good chance that we can somehow hold this level here. Currencies are known for trading in ranges for a long time, and a lot of people don't like that, but I like that just because it's a lot. I wouldn't say predictable, but you can expect things more, right? So I do like that. We've been trading here for some time here. So if we do find our way back up into this level, I would be looking to go ahead and short it, as long as you do have a strong bearish reading on the euro dollar, which I can see that being the case, right? We do have strong fundamentals for the US. Our growth has been good. Our CPI, has been elevated, which is not good. If you just look at rate probabilities here, which is, one of the main drivers when it comes to currencies is interest rates, you can see here that we are looking to hold rates all the way up until December of 2027. So this year, forget about it. Next year, still, at the very end is when you get a likely chance that you go ahead and get some kind of a rate cut. So I like that story. You have other central banks that are taking a different approach, right? So for one, the Kiwi dollar, the New Zealand Bank of New Zealand, they're taking a more laxed approach. They're basically saying, look, we're looking to keep our policy the same. We're just going to let this thing pass through. And then as soon as we get a chance, we're going to go back to rate cuts, right? Very different from the Fed, where they're very okay with holding for as long as they need to, or they have both voice that they're willing to hike if necessary. So there's a difference in tone there between those central banks. So I think the US is in a position where it's strong enough to hold rates and it really wouldn't hurt the economies, versus other countries that are a little bit weaker there. Any rate hikes or any elevated oil prices will really hurt them. So I think the dollar is in a strong position. So I'm just looking to go ahead and short it any chance I get. From a technical perspective, this chart here is still in the middle of this range. So I don't want to go ahead and buy when we're in the middle, because this thing can go either way, right? So I want to be mindful of that and make my risk to reward ratio as attractive as I can. So at this level is pretty good here. You are below the 200-day and the 50-day moving average. So we'll see how that lines up. And we'll see, right? And I can obviously be dead wrong. And if I am, then I like to short at 1.1800. I think that's a good level too. So we'll just see how that goes. Kiwi dollar, I really like as well. This one has been a stronger move to the downside, right? It's given us very shallow pullbacks. So we've traded into the 30.2 right here. This when we got to this low. And then we just completely rejected lower. So in my opinion, if we do get some kind of a ceasefire, dollar continues to fade off a little bit, and then maybe we can get an opportunity to go ahead and short the Kiwi dollar here at the 61.8. And that lines up, if I go ahead and zoom out of this chart here, lines up with this bigger level of resistance. So let me go ahead and clean this up for you guys. Right here, the 0.58500 level, give or take somewhere around here. You can see that at one point, we broke this level, traded into it, acted as resistance, traded below. Cool. And then we, ultimately broke this level, and this will support for many times here. You can see that. And then just vice versa, right? So this is a very strong level. This one right here in the middle, very, very strong. You also do have the 200-day moving average in there as well. So we kind of find our way back into here. I am looking to short the Kiwi dollar all the way up into 0.55500. I think that is a good level. Again, the fundamental score behind that is very strong. You have a very bearish reading on the EdgeFinder. So I love to see minus 13. It was stronger at one point at minus 15, but over the duration of this war and everything that's going on, I can actually show you guys here. The score has been very weak for a very, very long time. It's been very consistent. So I do love to see that. New Zealand US dollar, where are you? Geez, I can't find it. Oh, I can search it. I didn't know I can search it. There you go. There you go. Look at that. Bearish score here since March 11th here, March 12th, give or take. Look at this thing. It has just gotten completely worse over time. So I love to see that. So as long as that is still in play, I'm looking to short that pair. As far as another one that I'm looking to do is dollar CAD. Fantastic trade. Has been range bound and it broke out. And when it broke out, it did not stop going. So this was a level here that I was watching, this 0.3700 level. I was going to say, if we get a pullback, I'll wait for a retracement into this zone, and then I'll go ahead and buy that thing. We never got the pullback. And then you broke the 200-day moving average. And I said the same thing. Okay, we broke the 200-day. If we get a pullback into the 200-day, I'll go ahead and buy that again. We never got that pullback either. So now we are at another level of what could be resistance here on the dollar CAD. So we'll see how that firms up here. Any pullbacks, I'm looking to go ahead and buy, preferably somewhere here near the 200-day or this level right here. So that's kind of my idea there. Again, I'm just waiting for pullbacks on these pairs, and then I'll go ahead and buy them. I think fundamentally, dollar is very, very strong, and some other ones are not as strong. So we'll go ahead and see how that plays out. Let me go ahead and look at the chat here. Guys, war is going to escalate and inflation will rise and interest rate hike. So don't believe what Trump is selling. Let's go ahead and address that idea because that's a strong take there. Very valid take, actually. It could be probable. So let's go ahead and address what that would look like too, because basically what I'm telling you guys is my approach if there's a de-escalation. If there's an escalation, I do think that the dollar index still goes higher, right? You do have to this gentleman's point or lady here, higher interest rates, higher inflation, not a good thing for risk, right? So dollar index will continue to thrive. So if you do get that, you do get a break of this level, this 100.5. And then I think 102 is very, very probable, right? This is an area here where you were, acting on support. We broke right here. You retested it here again and sometime in May of 2025. So 102 would be a good level to target. And I would look for a break and retest of 105 and trade it higher. So definitely a possibility. So the common theme here is dollar to the upside. The only thing is timing, right? So if there's an escalation, I'm looking to buy the dollar. If there's de-escalation, I do think the dollar will get soft, but I'm looking to go ahead and pick it up because fundamentally it is still a strong currency. How's your Swiss yen trade, crypto? Let's see, dollar Swiss is lower here today. So it's kind of like still, it's near the break-even mark here. This is a trade I don't mind holding, but you can see here that this is a trend line that I had crypto meet right here. We're still trading below it. So we're like trading below it, but we're testing it. So we'll go ahead and see. You do have that 50-day as well coming in here closely. So we'll see what happens there. But again, this is a trade that has positive swap. You do have some central banks that are aligned for this chart to go lower. So I don't mind this trade at all. So yeah, it's to answer your question, it seems like I'm in slight drawdown there. Silver -6, any short setups? Ooh, that's a great question. In fact, I'll answer that question with my friend Marco because he's coming in here. We can go ahead and tackle this one together.
Hello.
What's up, Marco? How was your weekend?
Pretty good. What about you?
Pretty good. Lots of traveling.
You did lots of traveling?
Yes.
Cool. Yeah, happy Easter. And what has been happening in the markets? I know Trump gave an ultimatum. One more ultimatum. Will he follow through? Will he tackle out of it? We shall see. But I think the deadline is done by tomorrow at 8 p.m., something like that.
Yes. So thank you. Happy Easter to you too, man. It seems like both sides have some kind of a very definitive timeline here that's very short-lived. So we'll go ahead and see what happens. Markets are trading with risk today. You can see that with equity markets. You can see that with the currency strength index. Again, they're still under that 200-day moving average, so they're still vulnerable, again, because nothing has really happened yet. It's just all talk. So we'll go ahead and see what happens. As far as my trading goes and my trading plan, I want to be long dollar no matter what outcome.
Okay.
Whether it be an escalation, then obviously, for the current reasons, the dollar continues higher. And if there's de-escalation, I do think that there will be a drop in the dollar, but I'm looking to ultimately pick it back up just because the fundamentals are pretty strong behind it.
You're waiting for the DXY to clear this resistance level, or you are? Okay, cool.
Yes, 100.5.
100.5.
It's been pretty strong in the past. This market has been range bound for a very, very long time here, and you're starting to see a little bit of a clustered price action here towards the top end of this range. And so in my personal opinion, if there's a breakout to this level here, I do think that it comes with some momentum, and you do have some important moving averages here just from like a basic technical perspective. The 200-day and the 50-day, if they start to cross here, then that's I think that's bullish technicals for the dollar index. Again, this dollar short position was a very overcrowded one, and I think now you're starting to see a little bit of a position flip there. And so if you do get that breakout, I would ultimately target something like 102. That would be the first zone, and then above that would be 104. But again, that's me getting ahead of myself. But yeah, 102 would be the first point that I'm looking to target.
Anything on the EdgeFinder that's long USD or DXY that you're looking? I think you mentioned NZD/USD.
Yeah, so if I go to EdgeFinder here and I type, I'm going to retype this USD here. You can see everything besides dollar ZAR is bullish, the dollar. So
yeah,
UJ, dollar Swiss, dollar CAD, all bullish. Pound, Aussie, Euro, Kiwi, all bearish. Pound's kind of neutral there. So the fundamental picture is pretty obvious on that front. It's just a matter of finding which chart aligns with like my technical entry criteria. Like for example, dollar yen, that one's already ran up, right? Like it's trading near the relative highs there, so I wouldn't buy that one. I like euro dollar, Kiwi dollar, and dollar CAD, to be honest.
Cool. Nice. And are you still holding some positions from last week? I think you mentioned you were okay. Cool.
Yeah,
nice.
They're in slight drawdown here, but from a technical perspective, I think dollar Swiss, dollar Swiss here is still under that trend line that I drew out. Again, this is just a personal trend line, so this doesn't mean that the market has to follow this by any means, but it's like upward trend line here. We're still trading below it. We're still below that 50-day. So we'll see, right? But we are tagging it. So if this trade continues to kind of chug higher there, then maybe this first attempt was a little bit too early and I'm completely wrong. And in that case, then I just wait for another entry, maybe somewhere back into the 204s area. But I do like the idea overall that the central banks here are pretty much aligned for this chart to go lower.
Yeah, I do like that trend line as well. I think we could have hit the sort of the top on Swiss yen, as I have mentioned on the last stream. So if we go to the Swiss yen, it's break even for me, but I do think this is going to be sort of a ceiling that has been established by the central banks. And again, I saw some news out of the BOJ about not liking the yen weakness, which is nice. So they're still on it. They're still monitoring the markets. Hopefully they do something sooner or later. Let me just look at Euro Swiss.
Yeah, maybe if you do get a de-escalation somehow and the dollar starts to reprice some of that safe havenness out of it, then it could be worthwhile for the Bank of Japan to go ahead and say, hey, let's go ahead and intervene because you're not, intervening into strength in the dollar. Or markets could take it as what they did last time when you had the potential for a Bank of Japan intervention and they didn't even have to intervene and it just continued lower big time there. So I think there's a chance that they can wait it out, or they can still achieve their objective, whether a stronger yen, as long as the escalation kind of tapers down a little bit.
Yep. And stocks going up today, but not by a huge amount. So if I put the S&P, well, okay, they're definitely up on the day. We talked about the pattern of since the start of the war, so since the 2nd of March, every Monday has been bullish. So this Monday is no different, but we are now stuck at this trend line. and we're going to have to wait and see what happens there. So could we actually break out of it with some conviction? Could Tuesday follow through? Of course, I know today is still considered a holiday, so maybe the volume today is a bit low. I know the markets are open, but maybe tomorrow the like more volume comes in and the S&P breaks out of this trend line and we get a continued pump higher, then we will of course break the pattern. But something that is also important to mention in 2022, so some traders on Twitter compared the current environment to the one in 2022, at least looking at the S&P and looking at the price of the S&P, where we had a drop and then we had a relief rally before more bearish price action. And here we also had a trend line going, which got broken right there, and actually got some continuation, but then eventually it did reverse lower. So what's your take on this in terms of, let's say, the fundamental situation? Do you think this could happen, that we get a bit of a relief rally, or do you think if there's an actual de-escalation, it's just going to lead the S&P to all-time highs, and we're not going to get the big drop that everyone is fearing that we're going to have, like in 2022?
Yeah, I think the U.S. market is really kind of strong right now, by surprise, I would say. The data has been coming out pretty strong here. Now, someone can argue that the data is unreliable or fake data or whatever, but the numbers are out there, right? So I'm just gonna focus on that. So the fundamentals for, let's say, the stock market in the U.S. is pretty strong. I think there's definitely a kind of cap to it right now, just because if there is a de-escalate or escalation, and the big thing is just oil prices. If oil stays higher, that's higher inflation and that's higher rates, and that is like the stock market's kryptonite in a sense, like one of the big things that would really hinder this market. And so if there is a continued oil price that's elevated, then this thing is just gonna have very much of trouble passing that 200-day moving average. So the fundamentals underneath it are very strong. It's just waiting for that like sigh of relief of like, okay, the war's over, oil's gonna come down. This was very short-lived, and I think if we do see that a de-escalation, then this thing's gonna breach that 200-day no problem.
Yeah. And I saw a lot of people commenting on the NFP print. Let me just bring that one up. So if we go to the Forex calendar and we look at the last week, so NFP came out pretty crazy, but again, the revisions were pretty crazy as well, revised from, I think, -92 to -133. Now, some traders are thinking this is manipulation. What it actually is the way that the BLS conducts surveys. So a lot of companies, they take weeks, maybe even months to respond to surveys. So because some companies take months to respond to BLS, to the surveys, you get these huge revisions once the answers to the surveys finally start coming in. So for example, I don't know, for the latest NFP print, the BLS sent out a survey and maybe 30% of the companies will fulfill the survey in 2 weeks, but all of the other companies will fulfill the survey in the next 2 to 3 months. That's why you have these crazy revisions. So it's not like some sort of a kind of a theory to mess up the economy and to mess up Biden or to mess up Trump. It is just the way that companies report to these surveys, and they take months to actually answer them.
Completely agree. A very smart gentleman that I was working with at Awanda explained it to me very, very easy. He was telling all of us, he was like, when you get a survey for buying something online or you go to a restaurant and in the bottom of the receipt, you see a survey, like who really answers that on the first go around or whatever, right? Like the likelihood is very, very small numbers. And so it takes a lot of time to accumulate even a comparable, like relatively good data set, right? Think about it. Everyone here in the chat, right? When you get a survey, when you buy something, like, do you really answer it right off the rip? Most likely not. I definitely don't. So yeah, Marco, to your point, yeah, it takes a long time here for those that
Mhm.
are saying that the data is unreliable or it's fake data or whatever, I was watching Trader Nick's weekly outlook on the drive home here
Yep.
yesterday,
Yep.
and he had a very good way to handle that objection, and that is the bond market, one of the smartest bond markets ever in the world. Very sophisticated people behind that. Some of the smartest brains in the entire planet are navigating that bond market, and the bond market is saying at the moment here that it's not as bad. Like there's a chance here that you can have lower rates, or at least just even neutral rates for now, right? And the
Mhm.
the market here, the U.S. economy, has navigated this neutral rate environment. Like we've been stuck at this rate for a very long time here, it seems like. So we've been doing quite okay here. So I would say listen to the bond market, listen to this tool right here would be kind of like your best friend. This CME Fed rate tab here, if you go to probabilities, you can see where Fed funds futures are trading at and where they expect interest rates to be. And for now, they seem to be holding here. There's actually, if you go into June of 2027, there's a chance that you can start to get a rate cut, which that was not the case before. So
Mhm.
we'll just go ahead
Mhm.
and see. But there was very hawkish pricing here at one point last week where you were seeing 25% chance of a rate hike. Now that is completely gone. And now it seems like the path of least resistance for now is just, holding the rate steady here and a potential for a rate cut sometime in June of next year. So we'll see, right? We'll see how that develops. And the cool thing is that this kind of updates here in real time as well.
Yep. Yep. I didn't even saw that crazy spike on the 2-year. So this is the
Yeah.
daily. Yeah, it
Yeah,
looks
this is the
pretty
daily
crazy.
2 year.
Let me
I
just check
think
the 10-year.
it had something to do with the markets being closed or something like that. But
Yeah, probably.
yeah,
Mhm. Let me just check the 10-year. Yeah, the 10-year looks a lot more tamed, I would say. And also TLT. Okay. What do you think about gold? I think,
gold. Let's
or
look
I'm
at it.
planning to buy it once we flip bullish on the EdgeFinder, but I wanted to get your take. So what do you think about it?
I actually think I'll stay with like my positioning that I've always said was like watch the yield chart. That's the only thing holding this thing back. If that yield
Mhm.
chart, if global yields were way lower, then this thing would be high right now, way high. I think there's a possibility that if you get a de-escalation, obviously then yields come lower and rate cut odds shift and things like that. And if that's the case, then gold will be back in that environment where it really starts to thrive. So
Mhm.
I like
Yep.
gold. I would wait for a pullback of some sort, but I also do understand that when this thing starts moving, it really starts to move, and it really doesn't present those pullbacks. So I'm definitely aware of that. 4,400 to me is a good level. I think that there's a chance that you can get a pullback there for some reason. I don't know what the catalyst is, but I do think that if you get a pullback into this level here, that is a great risk to reward, just off of the back that this was resistance at one point, then it turned into support. You had this crazy flush lower here that became support, and then you came back into this level here that was support as well. So this is a very obvious strong level here, and then you do have
Mhm.
that 200-day moving average creeping up there too. So if you were to get somehow, again, I don't know what it would cause for that to move to happen, but if you can get a pullback into 4,400 and put stops below that 200-day, I think that's a good, high probability to risk to reward setup.
Yeah. Yep. Yep. I'm just waiting for gold to start acting as a safe haven again. But as you mentioned, it's all about it's all about the 2-year and the 10-year.
Let's
So
talk about silver here too. That's another metal that's very actively traded as well, and
sure.
it's kind of looking a little bit different here. So gold seems to be bouncing up here relatively strong versus silver is actually starting to look quite weak, and we're kind of just trading in between these two very important moving averages. And I think someone here in the chat said that it's getting a bearish reading on the EdgeFinder. Let me verify that. But what's your thoughts on silver?
Silver, personally, so let's just see the reading on the EdgeFinder.
Minus
-6.
six.
Okay, cool. For me, silver, I don't want to touch it at the moment. I think gold looks a lot better. So let's just put Yeah. Okay, great. Let's put up silver. It seems to be selling off overall. It seems to be on kind of creating lower lows, lower highs. I also know a statistic where if silver makes more than 100% in 1 year, usually the next year is break even or negative. And so far, from the start of 2026, we are actually break even, completely break even. So silver is not the favorite thing for me at the moment. The sort of the 20 MA is trending down as well. I think gold reacts better to the whole situation. I think gold had the massive sell-off, but could recover more quickly than silver. I know there's a high correlation about 60 to 70%. So yes, if gold moves up, silver moves up as well.
Mm-hmm.
I just think there's more. The edge is better to sort of buy gold, and especially because I'm not sure how the 200 EMA looks like on silver. So let me put it up here. So this was a pretty good level of support. Now let's take a look at silver. Bouncing off as well. So bouncing off as well. I just think gold has been trending up more steadily and in a cleaner fashion. So I think it's a bit more high probability to buy. And personally, it's my favorite. At the moment, silver is bearish. I think gold is neutral, which also could mean that gold is going to flip bullish sooner than silver.
I think it's a really hard trade to go. I think gold is the more attractive one to answer that question very plainly here. I'm gonna flip it here to my screen. Perfect. Here, I found this post that I did after that silver crash that we had. So we had like a really big run up here in silver, and then it crashed. And this chart here, this very interesting chart. I couldn't find it without on Google. I found this one here, but it wasn't the same. But essentially, when silver has a crazy run up and then it falls 20% or more very quickly from those highs, the forward looking returns are very, very bad. And if you go to like a big chart here, like you know, when you're thinking of like the 80s and 2011, which were that big moment. So if you go to silver and you go to a 12-month chart here, right here, these were the events. This was in the 80s, and then this was 2011. You had a crazy monster run up there, and then you had a big drop, which we seem to have are experiencing. So it seems to be like somewhat could be the early stages of it as well. But the forward-looking returns after a crazy move to the upside there are non-existent and very lackluster. So you kind of see it kind of fade all of that and then just kind of move lower, and then it just becomes very boring until there's something else that props it up. So I think that silver could very well be still in the early parts of that developing big move to the downside. Excuse me. And then you can just continue to kind of trade into nowhere. So just having that on the back of my mind, and you know, the bearish reading on EdgeFinder, I guess to answer your question, man, like silver to the downside could be a trade that you can take. However, timing it and trading it, I'm not a silver expert at all. I've never traded silver, so I really wouldn't know how to guide you on that front. But as far as forward projection, price action, this is not financial advice, but I do think that it's probable that silver can trade lower for an extended period of time.
Yep, I will agree with you. And I do love the chart that you showed with sort of the cycles, because after there's a cycle, after the cycle ends, usually it takes years to bring us back to another cycle. And we know that the recent one on gold and silver was because of the sort of devaluing of the dollar and lots of printing, possible inflation coming, and cutting interest rates into inflation and all of those catalysts. So we may now be in the flat cycle, which could even hit gold. I'm not saying that gold has to go up. Gold can stay flat as well for months and maybe even years, like we had, for example, from 2020 to 2024, or we had from 2011 to 2020, or essentially this whole period was pretty bad. So from 2011, we didn't go back to the all-time highs, or we went back to all-time highs in 2020, and then it took another 3 to 4 years to go and have a crazy parabolic move to the upside. So gold is sort of the fan favorite at the moment, or it has been in the last 2 to 3 years. But there has been periods when no one was talking about gold, and everything all the people were talking about were stocks or currencies. It's always something. Or Bitcoin. Bitcoin has cycles as well. So.
Yeah, it's always something, and we always say this, but that's the cool thing about trading macro is that you don't have to be. I know a lot of people love gold. They love gold. They want to trade gold, but don't force gold if it's not in play. Like, if there's a resolution in the Middle East and stocks is the way to go, then stocks is the way to go. And if there's not, and it's the dollar, then the dollar's the way to go. But there's always something. There's money flowing somewhere. Smart money does not like to be parked in collecting nothing. So they're always looking for a new home. And so that's the cool thing about trading macros. You get to understand that, and you will always have an opportunity somehow. This is that gold chart, though. The gold chart comparing that silver chart. So this was at the 80s move. You had lows gold, kind of chilled out though, very mild. And then this is that 2011 fall in silver price here. Gold also kind of trickled lower there, but a lot more resilient than silver there. So it didn't retrace the full move like silver did. But it did retrace a good portion of it, and it ended up just trading higher there. So, but yeah, I'll go ahead and leave you. I think you have the DNA funded challenge here very shortly, Marco. So don't want to cut into that one. And we have lots of time to talk during this week. We do have NFP as well, or not NFP. I'm sorry, Fed Day on Wednesday, I believe. So
we do.
I think that's what we have on the big day on Wednesday. I could be mistaken.
Like a Fed interest rate decision.
Let's see.
Because I think it's RBNZ tomorrow. Meeting minutes.
Meeting minutes. Meeting minutes. Okay, not a Fed day, but meeting minutes. So, cool. Yeah. So we got a lot to talk about. We have another stacked calendar there. So very excited for it, man. And I'll let you get to it.
Thank you. I'll see you tomorrow, and let's see what happens with the deadline that Trump put out. So let's do the giveaway now. If you want to participate in the DNA funded giveaway, I'm going to post the link to the form. So just copy and paste that. In the comment section, you'll find the link to the JOT form. So just fill it out and you'll get entered into a giveaway. It's going to be a 5K one phase account. Let me check with the codes. Yeah, 5K one phase account. And if you don't want to participate in the giveaway or you don't win the giveaway, definitely consider getting funded with DNA. So this is my personal 25K two phase account. I have passed the phase one. I've passed the phase two. Now I'm on to the funded stage and I'm down minus $740. So unfortunately in drawdown, but we're going to see what happens. They have a sell on GJ, buy on S&P, buy on gold against the euro. And this challenge is purely traded by ChatGPT. So I've had a great experience so far. There's a big broker behind this prop firm. They're using TradeLocker, which is in my opinion, the best software to execute positions. So if you do want to get funded, we have the code A1Live, which gets you 25% off any DNA funded challenge. Okay, so A1 Live, 25% off any DNA funded challenge. 1 minute ago, Iran rejects a ceasefire in reply to US via Pakistan. Let's take a look at that. So if we go to breaking news, Iran conveys reply to his proposal on end of the war to Pakistan. Is that market moving? No. So looks like it's no deal. We're going to have to wait and see what happens with the deadline that Trump put out. But looking in the past, Trump usually does a taco, meaning he chickens out with any sort of deadline that he puts out. And most deadlines that he puts out are 2 weeks? I think it takes 2 weeks for anything to get done in the White House. And of course, it doesn't then take 2 weeks. It takes much, much longer. That's just a side note. So, rejected ceasefire. Iran demands a permanent end to the war in reply to US. Yeah, I have a bit of a delay because it's the free version. So let's check the markets. If we go to the DXY, I mean, the markets are not really moving much as far as I can tell. If we go to the 1 hour charts, yeah, movement. Very little movement. Let's take a look at the 10-year. Gold. It's just old news. I think the markets are no longer surprised by no ceasefire or no agreement or just the conflict being in a stalemate and just continuing as it is. That's how the markets are priced in at the moment for a prolonged conflict, I would say. And oil is just going to keep on trickling higher. By the way, I am in a buy position on oil. I took 50% off at 111. The rest is running. My stop loss is at 95.71. We have almost hit the swing highs that we had recently. I'm in a sell on USD JPY, betting on a possible intervention. And I'm in a sell on Swiss yen, also betting on an intervention, not just from the Bank of Japan, but also from the SNB, which is the Swiss central bank. So let's do the giveaway right now. Let me go to the list of all the submissions. Today is the 6th of April. Okay, just a second. 6th of April. Let's copy all of the names. Go to the wheel, post, spin. Let's see. So it's a 5K one-phase account, just to remind you. Abdul, I don't want to butcher the whole name, but Abdul, congrats on being the winner. I will send you the link to the free challenge after my segment ends, okay? And as a reminder, code A1Live gets you 25% off. The info is in the comment section. I have the Nikkei on the watch list. I would love to buy the Nikkei, as you probably know, because if you have been following me in the last 1 to 2 weeks. So the Nikkei is my favorite stock index at the moment. I'm waiting for a ceasefire. I'm waiting for a clear ceasefire. Words don't matter. Actions do. Actions are what is actually going to prove to me that there's a ceasefire. So I'm looking at the actions and I'm looking at a possible ceasefire. So far, it's not on the radar. Gold, I want to buy gold, but I'm waiting for a bullish reading on the EdgeFinder. So I'm waiting for the EdgeFinder to flip bullish right here under bias, and then it's going to be game on to buy gold. I think gold should start acting as a safe haven sooner or later. So let's see if my breaking news have loaded. Yeah, so Iran rejects a ceasefire in reply to the US via Pakistan. One thing that I don't know, how can Pakistan have nuclear weapons but Iran can't? I don't know. Maybe I'm missing something, but that's weird. Essentially, I want to buy gold. I think it's going to go up. I think it's going to start acting as a safe haven sooner or later. Yes, if the 10-year, if the bond yields keep on going higher, then gold will sell off. But I think we could get a pump on gold. I think that could happen, especially if we cross that 20 MA. It's going to be a nice level for me to buy, nice level for me to get in, aiming potentially at all-time highs. I think that is fine. So I can see we have Tiger coming on after me, and I have reached the end of my segment. Thank you very much for watching. You can catch me every day this week. I'll be giving away one challenge per stream. I wish you good luck in the markets. Stay safe as well. And I'll catch you, or you can catch me tomorrow. Don't go anywhere because you have Tiger coming on right after me. See you and goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here, coming on to close the show out for you guys today. Hope you're doing well. Hope you had a wonderful weekend, wonderful, relaxing Easter weekend. I know Saturday I vegged out. I didn't do a thing. It was awesome. Just watched YouTube videos all day. I usually get back into my mindset, usually starting Sundays, Sunday afternoons, as far as starting to take a look at the COT report, take a look at what's changed on the EdgeFinder, and start mapping out those zones for the week. So, yeah. Dawit, yeah, I was just seeing where you put rejection of ceasefire by Iran. Yeah, exactly. They have rejected that, including a recent 48-hour ceasefire offer that was delivered. So, yeah, playing hard to get. Okay. They're playing that prom queen that's playing hard to get right now. So, but yeah, at the end of the day, yesterday, President Trump did, of course, make that ominous post Tuesday, 8 p.m. Eastern Standard Time, and that was it. So it's kind of got a lot of us, I think, on edge a little bit, just wondering if it's going to be a speech, if it's going to be more, something crazy. I don't know. Who knows who the hell knows? So we'll see what comes out of that tomorrow evening. But yeah, today we did just have the services PMI drop. Now, the previous PMI number was a positive number for the dollar. So this obviously does give us a little bearish box when we're taking a look at our dollar heat map, just isolating the dollar and all of its recent high economic releases. But it's still comfortably in expansionary territory. Talking about the services sector over there, anything over 50 on this is expansionary. So, yeah, it was quite a drop, a 2.1 point drop for 56.1, but and of course, it was below the forecast as well, but we are still comfortably up. The dollar remains the strongest currency at the moment. And once this chart updates over here, then I think it'll drop into the 60s, I'm assuming, mid 60s or something, whenever this refreshes. So, yeah, nothing's changed for me anyway this week from last week. It's all about dollar strength and Swissy and Kiwi weakness. Okay, as far as looking to try to sell the Kiwi and Swissy. So that's what I'm looking at for the week. I am still in that pound CAD trade, guys. I told you about on, I think, Friday. I got into it Thursday, but I told you guys further about it on Friday. So obviously Friday was a thinner liquidity day, and I went to close my trade out because I told you guys ad nauseum I was going to close it out. And my broker closed a little bit earlier than it normally does. So I was unable to close my pound CAD trade. But so needless to say, I spent the weekend not sweating it out. I still felt confident in my analysis, but, I felt kind of silly telling you guys about the showing of care and not looking at Sunday gaps to totally screw our positions. And then I go and I do the same dang thing. So, but anyway, yeah, yesterday looking at pound CAD, we did obviously, we had about a 10 pip drop when the market opened, and then it's just been up ever since. So, in hindsight, yeah, obviously I'm glad I stayed in it, but did I Am I really that excited about it? Not really, because I told myself I was going to close out and I didn't. So yeah, needless to say, I need to understand the timings of my brokers a little better, make sure, pay attention to the emails, guys. You guys have probably noticed this for whatever brokers you have, whether it's a, cash account or challenge account, especially, they tend to send you an email saying, hey, just so you know, we got an upcoming holiday schedule. This market may close at this time or whatever. I failed to see it, so my bad, but I lucked out. But again, we did bounce off that 4-hour demand zone back here, so I still felt confident in it. Now, we are currently bouncing into this supply zone area right here. Okay, that's why we're getting these wicks. So I still think that we'll be able to push through it. You guys remember I'm targeting up here at the 185.20 area where I've got that green line. So that remains my target. I'm going to try not to let this 1 hour supply zone scare me off. I mean, it did have a pretty good drop down, pretty good gap, showing some inefficiency in this particular spot of the market. And yes, we did have a yellow, as you can tell, a yellow volume spread analysis candle on this expanded range candle, but I don't think that's that big of I don't think that's a big enough spike to really scare me out of this position. So I'm going to stick to my guns, and keep my profit target up there. But yeah, so that's where I stand right now, guys, on my one open trade. Taking a look, and guys, let me know if you have any specific assets you'd like me to look at on a chart. Matthew, can you talk through your approach to trading? I've heard of supply and demand, but never used or fully understood it. Yeah, everything rises and falls based off the relationship of supply and demand. There just so happens to be a way to mark it on the chart. And it really has to do with consolidation points followed by really strong pushes up or drops, okay, determining if it's a supply or a demand zone. So the idea is, the concept is those consolidation points is where you had a temporary agreement, a temporary fair market value of price. And then at some point, either supply is going to exceed demand or demand is going to exceed supply, and price is going to violently push out of that consolidation. So when you get those pushaways, those expanded range candles, like I showed on this example here, okay, this just looking over here, okay, this is agreement. This is a temporary agreement between the buyers and the sellers. You can look at it one of two ways. They're either agreeing on price or they're fighting it out and nobody's winning. But at some point, supply or demand is going to exceed the other. In this case right here, supply exceeded demand, so we had price pushed down. Now, I was making my buy off of this 4-hour zone because over here you had a basing and then demand exceeded supply, so you had a push up. And there's a few, odds enhancers I use as far as determining if that zone is strong or, if it's an institutional type zone or if it's just a retail supplier demand zone. But, the simple way to look at it is try to avoid the retail chop zones. Like we look right here in this kind of orange box, as you can kind of see in the background. Here, let me do this. Turn that off. So you kind of have a little bit of a faint orange box. That just very simply means contraction, okay? Contraction, consolidation, the start of a zone. And then at some point, price leaves that zone when demand exceeds supply or vice versa. So, but what that is to me is a little more of a retail area. That's where there's not a whole lot of institutional type activity taking place because they tend to go for the more extreme areas. And so for me, I avoid this here, and I wait till price goes a little deeper and gives me a little cheaper of a price. So there's, that's the basic, is just saying, hey, where is supply exceeding demand? Where's demand exceeding supply? And those consolidations before the moves tend to have unfilled orders in that area, to where when price retraces, the rest of those orders get filled because, as you guys know, a bank, a hedge fund, they're trading very, very, very large position sizes, much larger than you and I, much larger than Nick, okay? So they can't just fulfill their order at once. They kind of have to layer their order in, or accumulate, if you will. So if they start accumulating, but price runs off before they have a chance to fill their order, well, they want to wait until price comes back so they can fulfill the rest of their orders. So that's just like a 30,000 foot view of supply and demand. But Yeah, as always, it's not just the zone I look for. I look for other odds enhancers as well. Okay, moving averages, RSI. Sometimes I'll use well, there's a list of other things, but that's the main things: RSI, VSA, volume spread analysis. But anyway, let's see here. Matthew, you know, I kind of have just played around with VSA, volume spread analysis, as far as seeing where the big amounts of activity are taking place. As you guys know, in currency trading, we don't have centralized volume, so we kind of have to play. We kind of have to get creative. And the one that's helped me the most is using volume spread analysis, kind of your tick volume, so to speak. So you know, in a short, easy to, you know, the short answer is I look for big candles down here at the creation of, or the candle leaving the consolidation. So that's typically what I do. You know, unless you're everybody in GameStop entering the same place, you're not going to typically see a lot of these big expanded range candles down here, talking about the yellows or the occasional reds that we get from retail. Okay, again, we're not placing $1 million orders, so the institutions are. So this is kind of a little bit of a footprint, if you will, just showing where they're really getting engaged. So, you know, I like to see these expanded range candles, not so much on the basing, but really on the leg out. When I see that, then that tells me that's, you know, that's institutional type activity taking place, if that makes sense. So that's kind of a quick answer to that. Zenny, you're in a pound Kiwi. Let's look at that for you. And just taking a quick look over here, we got a lot of stuff on the EdgeFinder today, guys. I know the middle part of last week, we had our embarrassment of riches. It kind of thinned out for like a day, and now we've just got everything and its uncle back on the list. So pound Kiwi, yeah, the very top. That's right. That's the very top one. So as far as what I'm looking at on pound Kiwi, now I'm already in a British pound currency trade, so I don't know that I'm necessarily looking to enter a second pound just so I don't double up my risk. But if I weren't in that pound CAD, then it looks like I've got an alert down here at 2.30. Sorry, turned my phone off. 2.30 area. Now that's a zone that's already been hit. Talking about this one over here. Looking up through here, we did finally break through this overhead supply back here, right in this area, before retracing and climbing higher. So a series of higher highs and higher lows, and now it's just kind of basing and consolidating. And I personally don't really like any of this right here. Too choppy, congestion-y, retail trading-y, if that's a new word, I just made it up. But that's basically what, to me, the way I trade, this is all just one big congestion, one big retail chop zone. So this is kind of the example I was talking about earlier. When I'm looking for supply and demand zones, I don't typically want to find one in this area because of all this fair market value. Okay. I want to be finding my zones deeper down, like down here, I've got one, okay, much deeper down. So it's a ways away, but a pound Kiwi is our strongest currency pair, right? So it may not even give us a chance in heck to come down here to this zone of demand that I've got mapped out. So you're in a retail area. Okay, it's definitely a pricey area. The good thing is we have broken the structure, so that may give you a little more push up. Now, what have I got drawn up here? I've got a blue line. If I go all the way back, okay, so it's a former resistance point. Now, I don't know about you guys, but I do like to look quite a ways back at times to see where price turned violently at one point. So that's why I identified this spot up here at the 2.32 area as a former very strong resistance point where price just cratered. A little bit of resistance here, and it looked like it didn't really respect it a whole lot other than these 2 points back here. But yeah, just be careful about that. You know, this is always a good thing to do. Again, you know, some may think that that's too old and it's expired, but I don't. I mean, you go to a daily, go to a weekly, and start looking for points like this, guys, on your own, and just see if those spots get respected. If they don't get respected, ignore them. But if they get a if they get a bounce even once or twice, I'll keep it in mind for when price eventually comes back around to it. So, but yeah, as far as pound Kiwi, yeah, just to finish that out, I mean, it's got us a nice push up, and really the main resistance I see as far as overhead supply is that yellow box up here. Okay. So to me, I would look at this as a daily supply because you had a gap coming out of it. You had about what, 6 or 8 red candles coming out of it. It broke structure points along the way. That's a pretty good area where if I were in a long position, by the time price gets up to this area right here, okay, I might be thinking about either getting out of my trade or selling half, or, you know, kick the rest maybe to the top or something like that. So yeah, I think you got a ways to go. Good 50, 75 pips before you might start thinking about that. But you're in a good trade as far as I'm concerned. Pound New Zealand, #1, and it's on its way up. So good stuff. Let's see here. Hey, adorable possum. Is James hopping on to? No, I'm the last one. Speaking of possums, my cat would not leave me the heck alone today. He likes to meow its butt off, and I actually thought I would show you guys a quick picture of him if I can find it here. Okay, this cat will not stop meowing. Okay, there you go. I'm trying to make my videos and cut up my videos. He's just a fat old thing, a lot of hair and bushiness, but thought I'd show you guys what I have to put up with in the mornings when I'm editing and cutting up my videos. One thing I was wanting to point out, guys, was the COT report. I don't think Nick went through it this morning, but the indices, I mean, these things got bought like crazy. Look at this: Nasdaq 5%, Dow 4.43%, give or take, S&P 4%, Russell 3%. So they're looking good from kind of a sentiment analysis point of view. And then, of course, if you go down into the put to call ratio on these things, just looking at the options market, NASDAQ is still in neutral, but it was up here in the very high put volume just a short while ago. Dow is actually way high on the put volume. Okay. These are bearish bets the average options traders making, which we look at as contrarians for buys. And then not only that, but then you also had the S&P, which was pretty neutral as well, but close to the high put volume. But, and I think Nick touched on this on his weekend videos, these assets, they're just not, look, higher time frame, they're not really giving us a clear signal yet because they're still in downtrends. Okay, there's your S&P on the right. This is a daily on the right, and then over here on the left, I got a 4-hour. Just so you know the difference. But I've got my 8 EMA, which is the solid red, under the 21 EMA, which is the lighter red. So that to me is still just too bearish. Okay, there's your NASI. Same thing on the Dow. So I totally agree with what Nick said on his weekend video. For me to really get excited about these bullish signals that we have over here. Okay, Dow +9, NASDAQ and S&P +8. We really need to start seeing some type of, higher highs and higher lows. And we just don't have it right now because all we have over here, even on a 4-hour chart, is just, nothing but lower lows and lower highs. And we kind of did create a little bit of a double top-ish, rejection up here back on Wednesday, back on hump day, on April Fool's Day. And so we just need more information, guys. As nice as these scores are looking on the EdgeFinder, we don't yet have the technicals in our favor for the higher time frame, right? For the more shorter term swing trade style or mid-term swing trade. Like I'm a short-term swing trader, so I'm in trades 1 to 4 days typically. I need a series of higher highs and lows before I can get excited about buying. Because if we buy anywhere down here, I mean, you guys see I did draw out a demand zone down here. Well, it would be I think it would be front running it. So I still want to see what happens if and when it bounces, And if you really wanted to if you really wanted to start digging into the noise a little more, well, if we go to a 4-hour on the higher time frame chart, well, now the picture looks a little better. We got our 8 above our 21. But we still don't really have a higher high. So we got a low, we got a high, we got a higher low, and we're just basically, even with the previous high. So even at that, it's still not giving a very good signal. I would really need to see, something like this to start getting excited about it. If we were to use the 4-hour as our higher time frame instead of the daily, because the daily is not printing up the picture yet. Okay, again, the 8 remains below, and that's easy to see from anywhere, lower lows and lower highs. So all I'm saying is just be careful with the Dow, with the S&P, the NASI. Yes, they're printing, some really nice bullish scoring when we're taking a look at the fundamentals and even the sentiment, like we just saw on the put to call and the COT. But there's three legs to this three-legged stool we call analysis: fundamental, sentiment, and even though in some of our opinions the technicals are probably the least important, it is still important. So just be careful on that. But again, if you're digging down into the noisier time frames, the 4-hour at least does give us, a little bit better of a look as far as taking advantage of some longs. But I'm staying out of it, okay? Because again, my favorite time frame is daily 4-hour. Swiss yen, crypto meat. I love your name, by the way. Crypto meat. I love it. Let's go have a look at Swissy. Swissy obviously is the weakest currency. Go back over here real quick to our surprise index. Swissy on the fundamental analysis is, it's basically below the basement. So they're in the basement and they dug a hole through the concrete and then they kicked the Swissy off into it and covered it up with dirt and cement. That's how low the Swissy is from a fundamental standpoint. So just keep that in mind. And then the yen, it's not the strongest either. Okay, it's a 42. So I would say it's a little more on the neutral side. I think I've told you guys before, if it's like 40 to 60%, I don't really pay that much attention to it from a fundamental standpoint until it starts going either above 60 or below 40. So Swiss yen, have a quick look over here because I don't remember. Oh, come on. Swiss yen. I don't think that one was on our list, was it? Swiss yen. Yeah. It's neutral. But yeah, if we just look at the technicals, go back to a daily over here on the right. So 8 is below the 21. That's definitely, a little bit of a series of lower lows and highs, especially when we look at it on the 4-hour. Lower lows, lower highs. But if you're looking at like just a technical only read on this thing, which as you guys can tell, I haven't looked at this for a while because I got a bunch of old drawings up here. Get rid of some of this crap. Okay, if you're just looking at technicals only, we do have our 50 on the 4-hour chart. We got our 50 below our 200. So that's in agreement with the 8 below the 21 on the daily. And then I do have a supply zone drawn up on, I think, a 1-hour chart up here. So if EdgeFinder was giving us a bearish signal, which it's not currently, then I would possibly be interested in this supply up here at the 201 almost area. Yeah, basically the 201 area, because it's given me a lot of really cool signals. Okay. I got a runaway gap to the downside showing an inefficiency. I've got obviously a couple 1-hour candles of consolidation. So this is where, in my opinion, the unfilled orders are hiding. Okay. You had a lot of red candles. You broke structures. You kept on going. For me to get excited about this trade, I would prefer that it would pop up fairly quick, because I would want to maintain my 50 EMA, which is the light blue, below the dark blue, which is the 200. My RSI is already at the extreme, or it's already at the overbought level of 80. So that's another one of my odds enhancers. So, again, let's just pretend it is giving us a bearish signal. Okay. I would want this price action like this. What I would not want is something like this. Because if we got something like this to where it's lazier, well, then it's going to give my 50 enough time to probably cross back above the 200. So it's either got to, or get off the pot. But, because I like everything about the technicals. And the other thing I like about the technicals is how you kind of have a little bit of resistance right through here, creating a whole bunch of what? Liquidity. A lot of stop loss orders, if you ask me. And these, of course, would be green, right? So selling, push price down, selling, push price down. So you're definitely going to have some liquidity up here. So in a perfect world, again, assuming we had a bearish signal, which we don't, then this gives us the opportunity for price to bounce through liquidity, which banks need to fuel their sell orders. They need buy orders. And then just go a little bit higher up to collect the unfilled orders from the supply zone. And then that would have been a good trade. So we'll see. We'll see if we get anything on that. What is our score exactly on Swiss yen? I have my neutrals over here on the compact setup. Okay, -3. So we're really not that far away. The fundamentals are favoring the yen way more than the Swissy on this thing. The sentiment's not doing so hot on it. Okay, we're not really getting any smart money versus dumb money bearish signals. It's actually quite the opposite. And then technicals is a -1. So it's just too mixed of a signal. So just be careful with that if you are looking to trade. Perhaps the sentiment analysis side of things could mess us up. But other than that, everything else looks pretty good, because that's just isolating the fundamentals by itself, that's a nice bearish signal. Okay. And some people do trade just the eco score. Okay. That's why Nick set this thing up to where we have an overview talking about the top setups itself. And then he also has a macro only section right here on the top setups, guys. So on this section, if I go down, we'll probably have Swiss yen clear the bottom. There you go. So again, there's 1,001 ways to use this thing, guys, to help you out with trades. And if you feel that fundamental analysis is the only thing that matters to you, it's giving you a bearish signal. But if you feel that the sentiment analysis, the smart and dumb money relationship is important, then it's just not quite there yet. So, and then obviously if it's technicals, it is given a little bit of a bearish signal as well, like assuming we get retraced up to a premium zone, an expensive zone where those unfilled orders are waiting for us. You guys, before I do forget, keep in mind, Nick does have a 35% off code with Ola Prime, company I used to work with and moderate for and live stream for and coach for and do one-on-one sessions for. Quite a bit of items over there, but the code is A1 Live, and there's also that QR code. So if you are QR code on the screen there. So if you guys are looking for another prop firm, definitely give them a look. olaprime.com. They do all kinds of cool competitions from time to time, usually about one a month, where you can go and sign up for free on their site and just create a profile. And just by creating a profile, you can actually enter their monthly competitions, where they have real cash prizes, usually anywhere from like $2,000 to $3,000 for first place, plus a 100K account that you get for free, and some other perks for those basically like the top, 5 or 10 traders that finish out the competition. So definitely go check that out. olaprime.com. Again, you can create a brand new account for free. It's not required to purchase an account, but you just create the profile so that you can go do those free competitions. So definitely I urge you to go check that out. And then as always, reach out to me at Trade Like a Tiger on all the socials if you have any specific questions about Ola Prime or prop firms in general, or supply and demand, guys. I've had a few of you chime in of late on there, and I'm happy to help out in any way, shape, or form. If you just want to dig deeper into this thing called supply and demand, okay, I can always kind of send you some resources in that area as well. But other than that, ladies and gents, I'm going to continue monitoring my pound CAD long, and my alarm's going off. So, yeah, I think that's about all I got, guys. Be careful out there. President Trump did leave that ominous post. So let's see what the heck happens tomorrow at 8 o'clock Eastern Standard Time. If it's more, hot air, or if there's actually some concrete, something that we're going to get. Be careful today. Be careful tomorrow. Let's see what he has to say at 8 o'clock tomorrow. And with that, ladies and gents, that's the end of the day. I got to get back to work. Have a wonderful day. Stay safe, and we'll be back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.